For the week this week, well, Monday's pop on tariff relief was confusing, and it didn't last. There was exemptions on phones and electronics, but those were really just a delay, and then they're going to go into a different tariff bucket. Bank earnings stronger on trading revenues, this wild market helping the banks trade, benefiting from the thrashing market, but it didn't help the bank stocks, really. NVIDIA came out down 7% when they said that they're warning that they're going to take a $5.5 billion write-down on chip restrictions, which whacked the indexes on Wednesday. UNH came out, and there was a huge downside move, 20% on the earnings here on Thursday. They miscalculated the claims on Medicare Advantage. Powell's speech yesterday also hurt the market. He says no to rescuing the stock market, and he sees tension between the mandates. That's the mandate about inflation and employment. Inflation going up, employment really tight, and that's not a situation that he can really act very much. Federal debt, he says, unsustainable path, running crisis-level deficits while at full employment. I'm just, curious why exactly he didn't say that a year ago, but he thought it was important to say now. And also says they're likely not to move on rates for a while. He wants to see the tariff effect, and that brings an attack from President Trump, who wants lower rates. Gold soared as the dollar drops on a lack of trust in the U.S., and as the dollar continues to stay very weak. And the stock market indexes mostly lower here on the week on a slow holiday shortened week, and getting a little bit of a bounce today, except for the Dow, which is getting hammered because of UNH. We're going to look at the stock market analysis, and we're going to start out on the VIX and using cycle analysis as a timing guide. So I'm going to show this to you, and you're going to see how interesting this is as we switch over to the VIX. This is the VIX weekly chart. I don't have any cycle analysis on here because I wanted you to see how I bring that in and what this looks like, and as you look for the rhythms in the market. Remember, as the VIX goes up, then what that means is the stock market is going down because investors, traders, they reach for risk, they reach for puts. It puts a higher value on the puts, and that's what pushes the implied volatilities to the upside. So take this, this regular looking weekly candlestick chart, and I'm going to bring in cycle analysis, and you see, wow, does this pop out? As you can see, the rhythms that are here in the market. So what we had discussed was that it was likely that the stock market would go into a bit of an upside corrective period, and that would bring the implied volatilities down. That's actually what you can see has happened in here. And right in here, with an ideal trough right around April 28th, plus or minus a few bars is what we look at when the implied volatilities are likely to stop going to the downside, and then right over here is the next period of risk into May, June. Now, we've talked about the fact that the stock market was likely to decline into May, June. The last time I did this update, I talked about also that it may only be a test of the lows that we made around 4,800. I'll show that to you in a few moments. Just a little above or just a little below. That's based on many, many times when the stock market fell very hard and then had only tests or sideways action before the decline was actually over. So we might have actually seen the worst of it, but we'll know in this period of May, June, when the market is likely to move down. And you can see this is where implied volatilities are likely to move up again, as you see right over here. These are market energetics. That's what cycles are, is the rhythms in the market as money flows in and out, and we use this drawing tool to help us see that. So when I go over here and I switch over to the daily chart, you can actually see the synchronicity that we have in here as I look at just these last couple of cycles in here for you to see, and that is pointing at this area here where these two vertical lines are. That points to the ideal trough right over there around May 2nd. That's plus or minus a few days, right in here. And that means that, well, the market's likely to try to get back to the upside during this period in here. Maybe the implied volatilities fall down to about 24, 5, 6, 7, something like that in this area. But then we get into this rising period. So there's synchronicity between this trough in implied volatilities and this one here on the weekly chart, as you see right over here. That's, to me, a confirmation that the market is still going to be in trouble, that it's still likely to fall into this May-June period. Again, right now we have S&P 500 trading at 5,300. We're looking for plus or minus a test of that 4,800 by a little bit. And yes, that could be a pretty sizable decline when you get into that May or June period. So that's a look at implied volatilities that were telling me you were likely to get some correction in the stock market to the upside, where everything kind of looked cheap and buyers started to come in. But then over here, it looks like that's going to end. Let's switch over now, and we'll look at the stock market. But before we do that, I want to let you know that our cycle analysis workshop special is on right now. This is a huge discount. This is my method of analysis. It took me 50 years of study to really get to the point where I fully understand, as I do now in this ever-changing world, how to look at the flows of money, how to look at the rhythms in the market, and get information from that with all of the other indicators that we use as to market condition and timing. It took me 2 years to write this, over 6 months to produce 26 video modules, plus many of our tools for text videos. It's online, lifetime access, and you don't need any special platforms. You will never look at charts the same way as you did before. It's going to improve your directional decisions, and you'll be able to project out in time and price. So few types of methods will allow you to look out in time, and ours does. And we've added these bonus items of these addendums that are in here that will give you more and more of our work and more learning as we put in our behind the cycle analysis curtain sessions that are in there, where I do my analysis and teach as I go. It's phenomenal. $400 discount, just $897 for my whole lifetime of work teaching you. And if you're a level 3 or 4 member, if you become it, you get an extra $100 discount. You just write to matt@askSlim.com for those exclusive discount links on that for if you're a level 3 or 4 member. Go to the top of the askSlim front page, askSlim.com. Click on this right over here where it says save $400 in the cycle workshop. There's all kinds of information there and a link if you want to sign up. That is the Cycle Analysis Workshop Special, askSlim.com. All right, let's get back into the stock market analysis as we're going to look at SPX, NDX, Russell, and we'll look also at our special MCM Pro, which is a phenomenal app. So let's go back to the charts over here. I'm going to switch this from the VIX that I just showed over to the SPX, S&P 500 right here. I'm going to zoom in like this and like this. We're going to look at the weekly and the daily, and I'm going to move this over and reveal our great market condition monitor in here. And you can see in here as we're looking at the market condition monitor and the short-term trader mode is where we are right there. So you could actually look here at intermediate, short-term, near-term, which is your swing trader for a few days, or the intraday right over there on the MCM Pro. Let's you can see in here as we're looking at short-term how very bearish these are. IWM is bearish, not very bearish, because you could see what happened here is that the intraday 2-hour turned up, and that is the best performing one just recently. It's having a better week than the other indexes. So, but they're all really bearish when you look at that. Let's analyze this S&P 500 weekly first, and we will look at this time frame right in here, where just broaden this out a little bit more, and you can see again we're looking at cycle analysis, and you can see the rhythms in here. as they give us a sense for the market, the ebb and flow really of money coming in and money coming out. There's a minor cycle and a dominant cycle in there, and the dominant cycle was very visible right in here, as you could see. And in the stronger markets, well, like you see here, it really went invisible because the upside momentum was so strong. That line in there is our reversal scout, and that is the one that really gives you a good sense for the momentum in the market. Look where the reversal scout turned lower right over here. Now you got a whipsaw here in the reversal scout as it was building this double top right in here. And then it turned down again and started to break significant levels on the daily chart, and then we knew it was in trouble. Fell right over here to this monthly 38.2%. In fact, it absolutely was a bullseye when it hit that. And then the markets got this big reversal in here on some hopes on the tariffs. But timing really says to me that this is going to get a test. Again, like I said when I was looking at the VIX, I think it's going to be somewhere just above or just below this 4,800 before this is over with in May or June. So can't really tell past big breaks like this where they go into free falls. The last decline really was just a test of that area or sideways action. So we might actually get that. But right now it looks like when I look at the daily chart that this period here, which aligns very much with the same time frame, this is mid-May over here. If I look over here at this other dominant cycle, which is representative of the MDY for timing, that goes out to July. That feels a little long to me. So what this feels like to me is this test is going to come out into mid-May, and then we'll probably have the end of this for a while where the market gets a little bit better. So my opinion is that if you were, a longer term position trader, if you wanted to be a buyer, it would be into this period over here, into this mid-May period. If you look over here in the bottom, you see those orange dots. That's the option bias indicator, that when those came in, it warned us of an extreme condition on the downside that was likely to bounce. And this big bounce got up in here, but not quite up to these intermediate resistance levels. There's the intermediate 50 at 54.88. Here's the intermediate 61.8 at 56.48. Those could happen in this period where I showed on the VIX that we're still likely to get some upside attempts. But I have some doubts about that. It's more likely that it's going to just chop around in here, and then all of a sudden there's going to be selling coming in. There's a minor third and a minor half that you see right over here. It kind of came down in between there, and it was a little shorter cycle than we were getting here. 20 days, 21 days. This was 17 to 19 days. So it depends on which of these lows we're looking at. And this bounce in here comes where we have very negative momentum. You can see in here our slim ribbon PO is red. Here's where it gave you the downside momentum signal right there that said look out. And that was a perfect signal right over there. That's a level 4 indicator. If you want to learn more about that, write to Matt at askSlim.com. He'll tell you about that, tell you how to get some information and how you could put that on your TOS platform. This is a period in here we're just likely to be chop and then trying to move down. And again, there is risk that it's going to be a sharp decline and get down where it tests this area at 4,800 plus or minus a little bit in the S&P 500. So that's what we're looking at in here, whereas the weekly chart and the daily chart have synchronicity for this decline into this mid-May period. That's the highest probability of timing this period, and I showed you on the VIX, May-June was the period that it could still go to the downside, and there are some of our analysis points out into June. So again, this points out way into the beginning of July. I don't think that's going to be the case, but it could be. So we're not exactly sure. Risk rewards very high to the downside still when I look at this. Again, look at this very bearish situation here. If I go to intermediate here, you can see that right there, and you can see all of them align bearishly. If you were a position trader or an investor, you'd want to be very, very concerned about that. Until you get to the period where you get to the short term and you start to see these turning neutral or slightly bullish, you're going to be in conditions that the market could move down very sharply. Let's take a look at the NDX, and this looks very much like what we're looking at in here, as we saw in the S&P 500. Again, that got up into this area of very significant momentum, of resistance on big downside momentum. There's our reversal scout that you can see there, and it gets the resistance and just rejects it in a very big way. This again is mid to late May here on the NASDAQ, and this low right over here syncs up in mid-May. So this failure in here is, some sideways chop, and they're likely to be coming down again very hard. If there's some news that comes out that's favorable towards tariffs, it might give us some upside bounce, but I really don't think it's going to last. The risk rewards really favor a test in here. See this orange dots down there? Again, that was your bottom warning. It's just a great indicator telling you how to bias your positions in there. And right now it's yellow and neutral, just like it is in the S&P 500, as we're in this area where the stock market is trying to bounce. Let's take a look here at the Russell, the last one that we're going to look at in here for this market brief. And you can see in here, well, the same pattern, except this points out into late June. And that's the problem. Some of these cycles in a lot of the stocks are pointing out into late June, which means that we might get into this period where you get this decline and then a rally and then another drop into that late June period. This points to first week of July, actually. So we have to be very careful. There could be a ton of chop down in here as the market tests these lows and then tries to move to the upside. And to me, that means that it's really very likely to be a trader's market as we see. Let's just take a look very quickly here as I change this over and we scan into the trade setup conditions in here and see which ones are super bullish and which ones are not. Let me just scan down here and you can see that, whoops, I'm pulling down the wrong one. Where is that? Here it is. Okay, so you can see MSTR, DUK, of course that's a utility, McKesson, Cigna, Silver, you can see that these are all silver stocks down there, GDX, all very strong, as you can see. That's positive trade up to setup conditions. And the ones in here that are very bearish, you can see WDAY, Synopsys, SPGI, as I move down here. And you can see the ones that are just moving so fast. Sorry about that. I'll just click this a little bit. And you can see the ones that are very, very bearish in here. And there are so many of them. And these are going to have to change before you really get a sense that the market is changing. Look at all these that are very bearish. It's just amazing. And they have been bearish for a long time and then got to very bearish. That's how that works. And just so many of these stocks in very bad shape. So that's a look at the stocks based on the market condition monitor right there. And we'll just go back here to the S&P 500 and NASDAQ and the Russell, and you can see the conditions right here, just popping around a lot. There we go. And it just shows you everything is still just very bearish looking at that based on our built-in algorithms in this app. You can have this app, of course, if you're a level 3 or level 4 member. Difference is level 4 gets the intraday 3-minute readings on there. Otherwise, it's great for all types of traders in there. So that's a look at the stock market. I hope you found that incredibly valuable, incredibly interesting.